next speaker is Jake Taylor. Jake Taylor is the CEO of Farnam Street Investments. He's also the founder of Journalytic, which is an investment tool that I personally use and love. He's also the co-host of Value After Hours with Toby Carlisle and Bill Brewster. Bill Brewster's in the house somewhere. There he is. And more importantly, Jake's just a great guy, and I learn something from him all the time, every time I talk to him. I honestly have no idea what Jake's about to speak about, but I'm sure it's going to be amazing.
Next to us.
Thank you for being here.
Thanks, Ian. I appreciate it. Thanks for having me. This is, I've been wanting to come to this for a few years now, and then of course, was remote, and then finally been able to chance to make it in person. So it's a real pleasure. So we're going to be talking about hygiene today, which is kind of a little bit of a weird word. I really like this quote. Cleanliness becomes more important when godliness is unlikely. And I think when it comes to our investing, like godliness is very hard to attain. Just a quick little bit about me. As Ian said, I wear multiple hats here. But my favorite job that I have is being a dad and a coach to these two knuckleheads. So that's like my primary focus, although that's the most fun thing. So hygiene, like why would we talk about hygiene? I chose that word because, are we talking like, are we brushing our teeth here or what? Sort of, but I chose hygiene as the term because it implies a sense of process and not so much a destination. And you have to check that hygiene box every day. And you can't just cram for the final, right, before you go to the dentist. Like you need to be brushing every single day. And I think the same thing is true of our investment process where we have our habits and our routines. And it's really what you do every day. It's not what you do any single day. So we can break up the investment world or the investment hygiene world into kind of a 2x2 matrix where you have internal versus external and then mental versus physical. And we'll go through each one of these and hopefully give you a little bit of some things that might help you. And I also chose blueprint as a term because it implies that it's like what we plan on doing, but your version of it, what actually gets built, might be idiosyncratic to you. So first thing up is internal and physical, which we could just call health. We're all just basically these big bags of chemicals and electrical impulses. And, there's these chemicals in your brain, serotonin, dopamine, oxytocin, and they're all radically altered by the inputs that we give it, which are, sleep, our food, energy expenditures, your stress levels. All these things are what will influence inside your brain what's actually happening. And all of these are chemical building blocks that you filter the information that's coming in through. And they can radically color how you view the world and how you process information and how you construct your decision making. So, and I'll give you a really simple example. If I had you all stand up with your shoulders back and your head held high, that would actually induce you to produce up to 20% more testosterone and reduce like 10% your cortisol level. Conversely, if I had you sit with your shoulders slumped and your head kind of down, that actually would lower your testosterone levels by 25% and increase your cortisol by up to 15%. So interestingly enough, these things kind of go both ways. Like I could have you bite a pencil right now, and that's close enough to what smiling looks like that you would then actually feel a little bit of feelings of happiness. So our bodies matter, and this is from a TED Talk by Amy Cuddy, who's like a researcher on body language. So who wants to know this one weird trick to perfect health? I actually don't have an answer for you. That's just a Facebook ad. You'll have to figure out your own answers to it. And I think this is the most important. The only prescription I have is to experiment and see what feels right for you. Food, sleep, exercise, stress, the sun, breathing, play. I mean, all these things are probably all areas to focus on. But we all have different genes. So the input that we give our bodies will create the epigenetic expression of what you turn into that is completely idiosyncratic to you. So you have to see what works for you. So there's probably some hints there from Charlie about, 3 things drug, liquor, and leverage, right? He just crossed off all the fun stuff. But I think in this case, like leverage might mean stress in the investment context, potentially. So next up is everything outside of your body we'll cover. So is it best to be surrounded by, a huge library of books? Maybe, but that's not really the natural human habitat. In fact, the natural habitat is much more being outside. And so the EPA estimates that Americans spend 93% of their lives indoors. And yet our ancestors spent all their time outside, basically, and mostly walking. And so early humans covered from anywhere from 4 to 10 miles a day to make their ancestral living that they did. And there's Aristotle, Einstein, Steve Jobs. All of these people are famous walkers. Like they were always outside walking, and that was how they thought. And there are probably more insights and ahas to be found out on a trail than there are being behind your computer screen. But we do have to do our work somewhere, right? So, and oftentimes it does involve a computer. My advice would be to try to figure out to make it as productive and as least distraction as possible. Funny enough, I splurged on a $250 aerator that you put algae in, and then supposedly it's the equivalent of having 25 houseplants around you to increase your oxygen. I mean, that might be total bullshit, I don't know, but it felt good to do something that I felt like was maybe moving in the right direction. So, do you know when you do your best work? And best is really very context specific. For the majority of us, we peak in the morning, but peak isn't really the right word here. Actually, the better term is vigilance. And which really means the ability to concentrate, to stay laser focused on what you're working on. And yet sometimes that level of focus is unwanted. You want to have an unconstrained mind. You want to be able to daydream, to have that diffused gaze. Gives you the ability to see loose connections. And so usually in the afternoons for most people is when that vigilance is depleted, and then you can make these loose connections. So I try to structure my day to do the deep work in the morning, where that's the heads down, super focused work. And then the afternoon is creative meetings, reading, daydreaming. And I actually, pretty much every day I tell my wife, oh, I'm going on my Warren walk. That's what I call it. And what it is I go and there's a trail near my house, a couple miles out and back with some elevation to it. And I will walk and listen to the Berkshire Hathaway AGMs just over and over again. I started 94, I listen to today. As soon as I'm done, I get back to 94. And that's just kind of my meditation time. And I find that because I'm done with my work at that point by the day, I'm ready to just make all these different connections when my vigilance is depleted. It's really like those shower thoughts often, right? Who has heard of the Pomodoro Method before? Great. Italian for tomato, obviously. And what you do is you set a timer for 20 minutes, and then when the timer, and you work hard, you close all distractions, close Twitter, close your tabs, everything, and then you go, and when the timer goes off, you reward yourself with a break, and then you set the timer again. And it's just a way of kind of providing a pacing to your day that will allow you to probably stay more productive than if you're trying to multitask with 1,000 tabs open. In fact, Harvard Business Review did a study where even just having this near you while you're working, it greatly decreases your cognitive abilities because you're using a little bit of willpower to not check and see what's going on in there. So get that the hell away from you while you're actually trying to do deep work. So these are this is a series of process-oriented observations. You might call it working on your metagame. And as Ian mentioned, this startup that I've been co-founded is called Journalytic, and I'm basically trying to operationalize all of these things into a software that makes it easier to execute a continuous improvement process. And eventually, if this thing evolves to what I hope it does, I want it to be like an investment operating system that I can use that will do all the heavy lifting of recording the things that I want to know about my process, and then it's not as much of a pain in the ass to keep track of it. So who here has read Atul Gawande's Checklist Manifesto? Yeah, pretty popular book. I think it's probably a really good idea to have an investment checklist. However, from personal experience, I can say that it's really easy for it to start to get too long. And like at one point, mine was like almost like 75 pages, right? And so the odds of me going through that, and your brain will just want to conserve glucose and just start taking shortcuts, which defeats the entire purpose of having a checklist. So be careful with how long you let your checklist get. So errors in general that we will make come from blind spots, right? If you know that there's a potential problem, you tend to avoid it. And my goal is to try to never make the same mistake twice, which means when I do make a mistake, I carefully try to fold that back into the checklist so that next time I have a less chance of repeating it. And really, at the end of the day, what I'm trying to do is get as much of my investment process out of my head, out of the RAM here, so that I can focus on the bigger thoughts and have the systems in place that will free up the natural CPU cycles for the real part of the investment process and not the meta part of like executing it. And have you ever, who's ever hired like a personal trainer before? Quite a few. So I think one of the magical things about that is that they are the ones who are worrying about like what the next exercise is that you're going to do. You just focus on executing that particular exercise that they have you doing, and then they're going to tell you what the next thing is when it's that time. And you can just forget about like what's next, and you really get to hyper focus on just kicking ass on the one segment. And I think that same idea applies in the investment world. All right, so raise your hand if you know the difference between like a kind and a wicked learning environment. This is from Robin Hogarth's research. Well, the short version is, a kind learning environment is immediate feedback that's unambiguous and it's consistent. So kind doesn't necessarily mean that it's like good for you. Like, so imagine, when you're a kid learning to ride a bicycle, if you jerked the handlebars and you crashed and skinned your knee, like that was immediate, unambiguous, and consistent feedback of that skinned knee. So that was technically a kind learning environment. And you learn very quickly in that environment, like, okay, don't do that. That hurts. I'm going to stop doing that. Now, in the investment world, it is a wicked environment because the feedback loops are incredibly long. There's tons of ambiguity. And there's just an inherent randomness to it that makes it really hard to connect cause and effect, which is what you need to learn. So in the 1950s, there was this meteorologist named Glenn Breyer, and he created what's called the Breyer score. And it's basically like a two-factor model that's your assessment of the probability of an event occurring, and then did it actually happen? And the Breyer score, what it does is allows you to calibrate your confidence versus your accuracy. And so, when you think that something should happen with a 70% chance probability, that reference class should happen 7 out of 10 times on average. Otherwise, you're not properly calibrated. You end up being underconfident or overconfident, and both have their own problems. So how long does it take for you to figure out in the investment context whether you're lucky or good at it? I mean, this is like a kind of an eternal question. But if we're measuring only returns, gosh, I mean, it might be 30 years before you could have a significant, especially if you're like a low turnover kind of investor. Maybe it's 30 years before you would know whether you're lucky or good, especially if it feels like the last 12 years, which have been a little bit of a Groundhog Day experience, or at least that's been my lived experience of it. But 30 years is kind of ridiculous. Like, that's an entire career. So what can we do to try to untangle luck versus skill faster? And I think one thing you can do is make probabilistic predictions about specific business KPIs, and really any of those type of metrics. And you can start to accumulate at a much faster pace your predictions of, and do they start coming true, and how well calibrated are you? And then that way, then you start to get that N up higher of observations that lets you decide maybe faster than just looking at one annual return data point for 30 years. So if you imagine if something you bought and the price is going up, and yet all of your predictions for it were like way off, boy, that is when you're at your absolute most dangerous, right? Because you don't really know what you're doing, and yet you're being served up that like you're good at this and you're a winner, and you're probably about to double down and get your head handed to you. So who here besides Ian keeps an investment journal? Good. So in general, human memory is based on storytelling. That's how we evolved. We're sitting around a campfire, we're telling each other stories. And history gets rewritten inside your head with every recall. And it's an incredibly low fidelity recording system. And part of it is because our subconscious is it has a goal of its own, which is to protect our egos and our identities. And so it will twist things around to keep you the hero of this narrative, right? 73% of convictions that were overturned by DNA evidence came from faulty eyewitness testimony. So we are not the narrator of the story is unreliable. So I think it's a huge, huge advantage to get your thoughts, your feelings, your predictions, your decisions out of your brain and record them somewhere. And I think, I'm sure Ian could attest to this, but you'll be surprised by what you thought previously and how dumb you felt. And I hope that I still feel dumb every single day, because that means I'm still continuing to make progress and I'm getting better. It's when everything's too good that I'm going to really start to wonder. All right, so who here bought Amazon at the IPO? I know the answer is none of you, otherwise you wouldn't be dabbling in microcaps anymore, right? You'd have to. But I think we're all always haunted by the ones that got away. And it's always so obvious in hindsight, right? But I think, what about all the other IPOs potentially that you didn't buy, right? Do you keep track of those so that you actually see the reference class and not the one large data point that's like, oh, I let that one get away. I'm such an idiot. I didn't buy Expel. So these near misses are quickly forgotten and almost never recorded, and yet they're important data points. So one solution is to track your AntiPortfolio, which is basically just, and we can call it like your Costanza portfolio from George's doing the opposite of everything. But take what your instinct is and record it and see what would happen if you did the opposite of it. And the issue is that we all have these intuitions that we follow, and a lot of times our intuition is what leads the cart in front of the horse often, and then we go look for the data to support our intuition, right? And especially now with so much data out there, so many articles, so much information, you can find supporting evidence for just about any narrative that you would ever want to construct. So it's an incredibly dangerous time period, actually. So related to this is keeping tabs on the things that you passed on. And I think it's important to code why you passed on it. And just like Buffett, I have a too hard pile. But I often wonder, maybe there's this investment gold that is just like a couple shovelfuls away if I was willing to do a little bit more work on this. What if I kept digging? And I have filters for, mentally for, is there too much leverage in this business? Is it too low quality? Is the valuation too high? But all of those filters need to be empirically validated, empirically tested to see, are they adding to my process or not? And unless you're getting feedback on your filtration system by tracking the coding of why you rejected on it, I think you're kind of putting yourself at a disadvantage. So I'm a fan of Munger's advice to rub your nose in your mistakes, and we talked about evolving your checklist through errors that you commit. And there's this really great quote by Ralph Waldo Emerson that's men succeed when they realize that their failures are the preparation for their victories. And so you might not know this, but this is UCLA's coach John Wooden, best basketball coach of all time, obviously. But what's maybe not known is that he was a very early stats geek, and he took meticulous notes on every single player and every single practice. And he would, notice like, oh, our team's a little bit weak here. We need to add 2 more minutes to this drill next time we do it. And then he could actually go back and track where his team was and compare that to like the previous year's teams, where they were at that point in the season. And he could get a sense of like, okay, here's how we're tracking compared to previous teams. But he wrote all this stuff down. He didn't just keep it in his head, right? And this last set of things is, what you feed your brain. And Jim Chanos has this great thing he calls the information onion. And I think you want to try to stick as close as you can to the source material. If you imagine this game of telephone that happens where an analyst looks at a 10Q, let's say, and then they give us a summary to a sell side manager who then publishes something, and then someone reads that and then tweets about it, and then you just read the tweet. Like, how much is there going to be a distortion from that original source and then the tweet that you read about it? Like, the chances of that being like high truthiness to it, I think, are incredibly low. So you need to focus on places where you can find the most truth. And I think one thing to remember that's important too when it comes to this is that markets are complex adaptive systems, and a lot of times things just happen and they don't have a good reason. And just because there's a headline that says XYZ happened because something, like, that doesn't necessarily mean it's true. And so I think putting yourself on an information diet can help prevent that mental indigestion. And really, there's never been more noise than there is right now. I think it's incredibly important to shield yourself from it. How often should you check your stock prices? So imagine for a minute if you were a casino and you had a 51% edge, right? And every minute, and you just slightly more than half of the time you would be winning, and the other half you'd be down. And we know from Kahneman's prospect theory that loss aversion means that every loss feels 2x as bad as the win feels 1x good. So, now imagine so that you feel 1 unit of good and the downs make you feel 2 units of bad. Oops, sorry. You are all but guaranteed basically to feel awful if you're just constantly checking in on this casino. And, I think stocks are... Whoa, sorry, I jumped way ahead there. There we go. So you are very likely, stocks are not much different than this casino. And, if you check every single day, it's probably a coin flip whether you're up or down. If you were to check once a year, you're probably, if you're doing it right, you're probably more in the like 60-70% chance of being up that year. And, lest you think that I'm holier than thou when it comes to this, I find this advice incredibly hard to follow. I think I'm down to about maybe 2 to 3 times a day that I'll check, but even then, that's probably too much. But it always feels like, what if something really went on sale and I need to do something smart about it? So in general, investment hygiene to me is about maximizing your decision-making capabilities and really bolstering your patience. And I think there are 3 edges in the investment game. There's an informational edge, there's an analytical edge, and there's a behavioral edge. And it's possible, like I don't think I have better information than a hedge fund that has an infinite research budget. My wife can attest that I'm not smarter than average, so I don't think my analytical edge is going to be over and above everyone else's. That kind of leaves behavioral as the one thing that I can perhaps have an edge in. And to me, that's really about patience, waiting for that truly fat pitch. And, can I not get bored and can I not get too clever to tinker with a portfolio and really hurt myself at the end of the day? And I think this really is a game of you versus yourself. And, and with the right investment hygiene, I think that you guys have a really good chance of being successful. So that's it. Questions? And here's just I put everything into a checklist for you because I wouldn't be a good presenter without a checklist.
Questions, anyone?
Hello, my name is Doug Moan, and I saw that you were going to be on the program, and I thought of this question in light of your podcast history and popularity. I listen to a lot of podcasts, and I listen to them mostly when like exercising, driving, bicycling. Probably put a couple thousand miles on Bill and yours program. And
Thank you.
I love listening to him, but I find I don't remember near as much as I'd like to, and it's probably because I'm always listening while I'm multitasking, doing something else. Have you found a way to capture information from podcasts you listen to, or is there something inherent about the podcast format that makes it difficult to capture value from the podcast we listen to?
Yeah, that's a good question. I mean, everyone else probably has just as good an answer to that as I do, but like, I'll take notes on a podcast. A lot of times if I'm out doing something else, I will stop for a second and take a quick note on it, and then it'll be more like kind of a follow-up thing, like, okay, I need to go and like write this up a little bit more later, because I like something connected for me and I want to capture that. But I mean, this is actually one of the reasons why I prefer reading over podcasts and other sources of information or other flows of information. And it has to do with the pacing. And when I'm reading, I'm the one who's deciding like when to move to the next sentence. And versus when I'm listening to something, it's being auto-fed to me. So like it just comes in as it's happening. And you can stop it and then take a note, but how many times you're like, oh, I should write that down. You're like, I'll forget it. I'm just going to move on to the next thing. Whereas when I'm reading a book, I'm doing it at my own pace, and therefore I'm much more likely to stop and take a little note in the margin relative to a podcast.
Thank you.
I'll just yell it out.
You would.
So you're like probably the best person I know at thinking about thinking. How do you not drive yourself a little nuts thinking about thinking? And like, it's something I've been thinking about a little bit lately is like, well, this purchase of Berkshire is actually like very flawed if the legend is correct, right? So even this guy that a lot of us, pray to as God is, arguably his entire career was a flawed decision. Obviously not that, but anyway, I'm just curious, like how you don't get trapped in thinking about thinking.
That's a good question, Bill. I mean, well, a lot of it has to do with information flow, and I try to stay out of too many of the currents that I feel like might not be helping me. And there's a reason why I listen to the Berkshire podcast or AGMs over and over again instead of the next, marginal podcast about somebody. And it's because I know that it's like tried and true, and it's stood the test of time. So I think there's kind of like a Lindy element to it, like older information oftentimes, if it's still useful, has a chance of being useful further in the future than like the newest thing. But as far as like kind of chasing the demons around in your head, I don't know if it's just like there's just not as much going on up there or what, but I hear people talk often about how they have these like crippling self-doubt internal narratives. And I just have never really had too much of that to deal with. So it's not like I'm not good at it or anything. It's just more like I didn't have to deal with the problem maybe.
Because you're overconfident.
That's what it is. It's an overconfidence issue.
Jake, that was awesome. Thanks a lot, man. I really appreciate it.
Thanks, Jeff.
Curious, since it sounds like the way that you absorb information the most accurately is through reading books. Curious about what your habits are on, you made brief reference, but expand on how you take notes when you're reading books. Thank you.
Sure. Like I said, I prefer the physical book over digital versions of it, and I feel terrible about it because it's kind of a little bit, it feels a little environmentally insensitive to just like keep killing trees so that I can read this book and when I could do it on a Kindle so easily. But I really do think the medium impacts the message. And I take a book more seriously than I do something that I read digitally. I mean, I just think that's 100% true. So I will write in the margins of books, and then I will go back after and I will take my notes out of it, and I'll actually like type them out instead of, they have these systems now that can highlight things and just clip it for you. But I think the typing it out is another way of kind of pounding it in, and it helps me to remember it. It's much more slow and it's kind of boring, and a lot of times, like when I'm being lazy, my stack of books to process will start to get accumulated, and then I get a little stressed about that. But then I'll just spend a few days just trying to get that pile back down and get my notes processed and inputted. But that's my system. It's not necessarily the best one.
You spoke about journaling, and I use Journalytic, the company you co-founded, but it can be overwhelming when you think about journaling, when you're thinking about, all right, now I have to journal my thoughts on everything I'm thinking about buying, everything I am buying, everything I'm thinking about selling, everything that I could sell. I have my investment checklist, I have an AntiPortfolio, there's only 24 hours in a day.
Right.
I think it can be overwhelming when people maybe think about all that they could be doing. So what's a good place for people to start?
I think there's actually, I forget who I learned this from, but there's this process where you ask yourself before bed the most important question. And then when you wake up, before you do anything else, you just write for 2 minutes, stream of consciousness, on that most important question. And it is unbelievable what your subconscious will work on overnight and figure out if you feed it before bedtime like the jobs that it needs to work on while you're sleeping. It's kind of a magical process. So that would be one thing I might try. And we're talking, I don't know, what's the total commitment there? You're probably under 5 minutes total in a day. But the insights that bubble up overnight when your subconscious has a chance to chew on it is really, it's pretty profound. Like, I'm a big fan of the book Think and Grow Rich. And I think that really this is just like a smaller version of Think and Grow Rich applied in a 5-minute bite.
Hello, Carl Malartre. I'm curious because Gawande used it a lot to collaborate. He used the checklist to collaborate like a nurse and a doctor. What do you think of collaboration in all of that hygiene, the collaboration on your decision, what you should invest, how to verify that you're not making a mistake?
Sure. I mean, I think, obviously the investment result at the end of the day is what you're after. So I think it's important to keep track of that, obviously. But I think just as important, perhaps, is setting a thesis for the investment and not letting that thesis drift as the facts are changing and then you're changing what you say you thought at that time, right? And one thing that helps with that is to do a pre-parade and a pre-mortem. So these are like the same ideas, but just kind of mirror images of each other. When you set your thesis, I think it's a good idea the pre-parade is like, okay, it's 2 years from now, everything went right here. And then let's list out what happened. And then the pre-mortem is like, oh my God, I got killed on this. Here is how that might have happened. And what that does then is it helps you to understand and help you look for thesis signposts of which direction am I heading in now, as new data comes in. Am I heading towards the parade or am I heading towards the post-mortem?
Do you use other people's brain in that process?
I mean, I think you can. I think you can have kind of a shared consciousness around an investment idea. But I think It's probably, at the end of the day, the decision, I think, needs to be made by one person, like one person who's accountable for the results. I think committees are typically not very good for investing, or maybe for really any decision, but I think especially in the investment world.
You mentioned the sort of negatives about feelings and intuition and sort of the faulty narrator in our heads. Have you found a way to sort of reliably track maybe the feelings that help you from time to time? Whether it's, George Soros's back pain, that's a tell for something, or I think Druckenmiller has something, obviously with experience, but in markets there's this weird, you have to have this weird, when you do what we do, you have to have this weird combination of confidence and almost arrogance and then also humility. And there are times when, you find an idea that you kind of know you want to own maybe right away, or it triggers your pattern recognition. And that might be a feeling that it might be faulty, but it could be a feeling that you ignore or don't ignore. Can you just talk about maybe the role of like the more positive aspects of your feelings and how you incorporate those?
Yeah, definitely. I think feelings are, and I think this actually gets into what's the competitive advantage in the future. And if you think about AI and its ability to process information and pattern match, if you're just kind of doing basic, if you're just doing kind of basic quant, screening and buying things, it's hard to imagine that there's a ton of alpha that'll be left in that world. And so what I mean is that you actually almost need to lean into your humanity, which is that intuition, which is that pattern matching that maybe a machine would have a hard time seeing. And incorporating data from outside of the observations of the machine. So shaking the hand of management potentially might be one of those competitive advantages that there's some information that you absorb there, and maybe it's at a deeper intuitive level. I tried to build this into Journalytic actually. So there's a thing called a mood graph in there, and basically you can just really quickly record. And I took it out of psychology research like this. It's called a affective circumplex, and what it is basically different feelings and magnitudes, positive and negative. And so you could just quickly drop a pin in there and attach a feeling to a journal entry, and then it takes your journal entries and displays them over a price chart, and it'll show you could see the color I was feeling bad or I was feeling good on this day when I recorded this on this company. And what I think it's ideally is going to show, and what I've seen for myself, is that, gosh, when the price is going up, I sure feel good about this company. All the data points coming in are I'm a genius. This is really working. When it's going the other direction, God, this thing sucks. Everything is going in the wrong direction. And even when and you're a pretty diligent investor, I think we're still very influenced by price movements. And it colors how you treat the incoming data. And so just being able to see that on a chart, I think, is actually very powerful to help as an antidote towards that.
Jake, you are a very impressive individual.
Tell my wife.
Great father, great investor, great author, great podcast showman, now a great entrepreneur. It's truly amazing.
Thank you.
What's maybe the underlying principles, mental models, I don't know, whatever you want to call it, that is the foundation for your success? Because, from my standpoint, it's very impressive what you do.
Well, I'll let you know when I feel like I get to success. But, a couple things that have helped me, every single project that I take on, I try to think of, is this a good forcing function to learn about something? So, a long, long time ago, I taught a class on investing at UC Davis. God, I don't know the students learned anything, but I learned a ton. Writing a book was a huge forcing function process to figure out, what do you actually know or not understand, because you have to explain it to someone else. building software is the next level of that, which is like, oh my God, you have to understand this at an atomic level to be able to present it in a software format. So every single one of these things is just like a forcing function to make sure that I know maybe a little bit of what I'm talking about. And then I try to take projects that kind of, where there's no wasted strokes in a single direction. So, managing money and also building a software for myself that makes me like track the things that I want to keep track of in my money management. Like they work together really well. Like they go back and forth. Even researching podcast segments and writing them up is a great weekly forcing function to like learn something new, stay actively engaged in the world, and show up, and hopefully like have something interesting to say. It just keeps me more engaged. And then that, leads into when I write a quarterly letter, that's typically I'll take something from that I'd written up already for Value After Hours. So I try to, there's actually like synergies when it comes to the applying the intellect to all those things. So that helps me to like not feel like I'm getting too far off into going different directions. They kind of all go within the same stream somewhat. Or I could be lying to myself about that and I'm just horribly distracted. One of the two.
So you've obviously made it your life's mission, I guess, to become a better person all around. And I don't know how long you've been on this mission for, so I'm kind of curious, how long that's been going on for. But my question is surrounding what you've been doing to enhance your life and your process as far as investment goes, in the sense of, have you noticed any correlation, positive or negative, in your investment portfolio to your obvious trajectory to make your life a more measurable and meaningful in so many different ways? And if there's not a positive correlation, how do you deal with that sort of mental mind F, if you will, and to keep you on track to continue to do what you're doing to make yourself better? Thank you.
Yeah, I would say that like self-improvement is a very core principle for me. And, if Munger's your hero and wanting to go to bed a little bit smarter than you woke up as an ethos, I think is an admirable trait. And so I strive for that. But I wouldn't want to sit up here and make it seem like I've got all these answers to things. I mean, I've just figured out a couple little tricks. But yeah, I mean, it's I wish I had a better answer for you. One thing I do love about the investment game is that there's nowhere else where you could read something completely divergent from anything that you would think would be relevant. And then it turns out like, oh, that's actually a really unique insight that I can apply to this thing. And it had nothing to do with it, quote unquote business or investing. It's just so multidisciplinary, and you really just have no idea how things can connect together. And I find that it's a nice forcing function to keep me a little bit more engaged with the world, because it'd be really easy for me to just kind of check out and just kind of go about my day. But like I actually, it's hard for me to go sit in a restaurant now and not think like, I wonder how many customers have to come through here before you get to break even per hour. I mean, just those kinds of little things about the world around you, like you take a much more active interest when you have a business mindset and an investor mindset. So I think that's a positive for me, because otherwise I would be, it'd be very easy for me to be apathetic than otherwise.
Hey, Jake, question for you.
Bobby.
Have there been any new trends or developments within behavioral finance that have kind of caught your attention, or maybe some old ones that are kind of resurfacing within the current environment that you've been going down those rabbit holes?
Boy, well, we can get into some like weird, deep shit if you want, but
yes.
There's this guy named Carl Friston, and he's a psychiatrist, but he has this theory of the brain that is just fascinating to me. And it's basically that the brain is this like Bayesian updating inference machine that's building models, checking incoming data against it, and then when it finds a surprise, like that's when it surfaces for you that something doesn't match your mental model. And like his work is being used right now by like AI researchers to try to create an artificial brain effectively. So it's definitely a pretty deep rabbit hole, and it goes into weird places if you want to explore that one. So I would check out. There's some like a few YouTube. There's a couple good articles about him that explain it a little bit more. It's called the free energy principle, is what he calls it. But really, it's just like the brain as a surprise minimization machine. So that's, if you want to do some weird stuff, you can go down that rabbit hole.
Hey, Jakes. Could you go into the investment journal a little bit? You mentioned obviously 75 pages too long, and what would be an ideal length, and what's any more detail on that would be really appreciated.
Well, I mean, it's so idiosyncratic. I wouldn't want to be too prescriptive here, but I think just being very, very careful about not being too long, where you will skip over things, which completely defeats the purpose of having an investment checklist. So in general, I tend to reference mine with stories of either mistakes that I've made or that I've seen other people make, because I find the story resonates a little bit more than, like this checklist, which has, it's 4 to 5 words per item. The stories like kind of get me back into that a little bit more mentally, and then I can look for the patterns that I might be exhibiting in this new potential investment. So maybe make it a little bit more story-based would be something that would be helpful.
Yeah, round of applause.
Thanks, everybody.